welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at a couple of indicators which seem to be pointing to the direction of the Bitcoin price and why, as per the title of the video, why we've got the green light for Bitcoin to hit this level. I'll also be having a look at the overall picture of what's happening around Bitcoin to see exactly what may happen with the Bitcoin price over the coming weeks and months. We'll also broaden our horizons by looking at the wider markets, the SPX, the gold, the dollar, the silver, etc. and also the 60-day cycle as well as the ETF. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So what are these indicators that are pointing to Bitcoin going to the next level, which is at $86,000? Okay, so one of the indicators that I'm going to show you is the Pi cycle top. The second indicator I'm going to use to target the price of 86,000 is not available on the BLX. So this is a BLX chart. The second indicator isn't available on there, but once I've shown you this and then go on the normal Bitcoin chart, together they provide quite a powerful reference point for the next target. So this is the Pi cycle, and for those people who want to know the settings, so in the indicators tab here, the one that I use is this one by Bilzerian Candle, Pi Cycle Bottom Top Indicator. And these are the inputs here, and this is the style. So the green line is the 111 simple moving average, and the red line is the 350 simple moving average. So I'll go cycle by cycle, so it makes it very, very easy to understand why the target of 86,000 seems to have quite a lot of credibility. So remember, it's all about probabilities, not certainties or guarantees. So what we've got here is the first cycle, going back to this bottom here, the bear market down here. The price action for Bitcoin always seems to follow the same pattern over and over again. And this is how we targeted certain prices about a year ago when we had target number 1 and target number 2, both of which we hit based on this and the other indicator, which is the RSI MTF line, which I'll show you a little bit later. So going on the Pi cycle, we had this bear market bottom here at the end of 2011, and it's the same pattern. First it gets over to the green line. Once we get above there, we tend to hit the red line, this time here several times, and then it messes about within this zone between the red and the green line, and then it breaks up into this parabolic move once it goes above the red line. So this is the parabolic move. And in this particular cycle, there were two tops, two peaks here, and it repeated the same thing on both peaks. So this was the first peak here, then we had another little bear market, went through the green line here, range bound between that, and then once we broke the red line, then we had this parabolic move. I'll actually change the color from red because it's clashing with the red line. So remember that particular pattern. So the second cycle here, this is where we topped out previously, as I've just shown you, at the end of 2013. Once again, we had a bear market, falls below the green line. The best time to buy, always below this green line. Then when we move above the green line here, you can see it's range bound between the red and the green line. But we do hit the red line, as I mentioned before, when we were targeting a certain price. And this carries on until the price breaks above the red line. That's where the parabolic move starts. So that's your signal. Keep an eye on this. When the price breaks above the red line, that's your signal for the parabolic move for the next few months to the top of the cycle there. Okay, moving on to the third cycle. So we had that last top there at 20,000. Bear market, falls below the green line, best time to buy. Then we break above the green line, and then we get range bound between the red and the green line. And this was obviously an anomaly here, but that's fine. Don't worry. There's nothing that happens 100% of the times. These are all about probabilities. But on the whole, we were range bound between the red and the green lines here. And once we broke above the red line here, that was your parabolic move to the 64,000. And the same thing repeated one more time, fell below the green line, above the green line. And this time, for whatever reason, people give a lot of reasons why we didn't go to much higher levels like 100, 200, 300, etc. But whatever happens, we have to accept what the market gives us. But the main thing to take away from this is that same pattern repeats very similarly, not exactly, but similarly. And we got this double top here before we fell. So let's now have a look at the current cycle, which is more important in order to make headway of where we're going over the next few weeks and months. So here we are, the double top there. Then we had this bear market, best time to buy below the green line here. Once we broke above the green line, we've been range bound between the green line and once more we've got back up to the red line. This was one of our targets. So now you can see what's happening. Just like the previous 3 cycles, we're now range bound between the green line and the red line. So once we break up, because many people keep saying, when will this parabolic move start? Well, now you've got your answer. As soon as we break the red line to the upside, that is your signal that we are now in the blow-off phase. But for the purposes of this video, looking at the green light for Bitcoin to go to a particular level, at the moment the red line, as you can see here, is exactly at 86,300. So this is why 86,000 is a target once we break the neckline of the 69,000, going back to this level here. So this is the neckline. We've been as high as 73,000, but you can see quite clearly based on this indicator, which has been very powerful over the last 3 cycles, and in this 4th cycle, what we've got is a similar development. So with 3 data points, this is pointing to this price here. This is obviously going to be going higher, so it may well be 87 or 88, but the current prices are 86,300. And if we put on the RSI MTF line, this yellow line weaving its way through above the price action here, you can see quite clearly where that is. It's right where the red line of the pi cycle is. So both lines are converging around about the same. The yellow line's at around about 84, 85,000 and the red line at 86. So you know that with a higher probability based on the previous 3 cycles, this price action is going to come and meet it somewhere along the line. Of course, the price may be a little bit higher at that point, like I say, at 87, 88,000. But the main thing to take away is to look at these 2 indicators so that we know the journey that we're on now at the moment. So this is really interesting to know exactly where, based on 2 very powerful indicators, the RSI MTF line and the pi cycle, both targeting this price range around about the 85, 86, 87,000 mark. So there you have it, something very important and relevant to keep an eye on, the pi cycle and the RSI MTF line. And for those of you who want to know the settings, and type in this one here, RSI bands multi-time frame by Jigger Striker, and these are the settings here on the inputs and the style. Before I go into the 60-day cycle, I'm going to give you the wider picture of what's going on around Bitcoin. So you're probably wondering why the Bitcoin price has dipped around 2%. Well, this is part of the reason, if not the main reason, and that is, as I mentioned a few weeks back, that those people who are claiming against the Mt. Gox exchange, they've won the case, and the question is, what will they do with it? And so far, what's happened is that the Mt. Gox wallets have moved over $7 billion to an unknown wallet. And if we scroll down here, we'll get a little bit more detail. So what's happened is that 107,547 Bitcoins worth about 7.3 billion have been moved to an unknown wallet, and there may well be more transactions to come in. So this will be happening between now and before October. So this may well feed into the narrative that I'm seeing on the 60-day cycle with Bitcoin and with the wider markets as well, that we may well be in for a period of consolidation over the coming months. And these are just some of the transactions it's listing here. So just keep an eye on that, the Mt. Gox moving these Bitcoins to an unknown wallet, maybe with a view to selling them. So maybe those people who will be receiving their long lost Bitcoins, they may well be wanting to sell them because of the value is much higher now than it was 10 years ago. If we have a look at the Bitcoin liquidation heat map, and this has proved quite accurate so far, and we can see that next level that this is going to come back down to is this yellow zone here. And you can see that zone is on $67,166. So anywhere around $67,100, very high likelihood the price is going to come back and take out these leverage players down here. And if we have a look at the Bitcoin tracker, we're going to have a look at all the Bitcoins that are being held by these ETFs here. And one thing of note is that the Grayscale Trust, with their current 289,000 Bitcoins, which they had just only a few months back at the time of the approval, they had 619,000, and they've been bleeding these Bitcoins ever since then. But interestingly, BlackRock is now coming up to a very similar level. They're only 4,500 Bitcoins away from actually surpassing Grayscale in terms of the Bitcoins held. And Fidelity aren't far behind with 160,000. And the other one of note here is ARK 21 shares at 48,000. So you can see there's going to be a flip going on very, very shortly in the next few weeks. And moving on to the Bitcoin ETF overview with the asset inflows and outflows. As mentioned in the last video last week on Thursday, we're getting more and more positive green numbers here. Instead of being red for every single day for many months, we're now seeing a green on the Grayscale Trust. And not only that, but you can see from here, the BlackRock ETF over the last 7 days is having a lot more inflows now coming in, 8,335. And this had gone to zero for many, many days over the last few weeks. And similarly with ARK 21, they seem to be ramping up their Bitcoins. They're up to 1,194 over the last 7 days. So you can see that most of these numbers are in the green. So we can expect quite a big effect on the Bitcoin price, and that the ETF inflows are still very, very healthy 4 or 5 months after the approval on the 11th of January. And moving on to the wider markets, let's have a look at the SPX and people being very worried about this red Marubozu candle that we printed last week, and that was on Thursday. But using this template of the 60-day cycle, what we can say here is that we made a new all-time high, having gone above this level here. We made a new all-time here. That confirms the start of the new cycle at this point on the 19th of April. We're coming up to this midpoint here and the end of the cycle around about the 17th of July. And as I mentioned in the last week's video, we can expect this to move into the mid-cycle and then to have a correction here. We may well have a correction at this point. We don't know how far this will go, and then move back up into this last portion of the 60-day cycle. And we can expect a right translated cycle, because that's exactly what we've had with this big massive run up to this point here. So this is what I'm expecting. So the SPX is still looking quite bullish, although with this outside bar bearish candle, you can expect some period of consolidation maybe here, or even a little bit of a fall. What I would expect if it does fall from there, you can see a level where it got rejected at this point. You'd expect it to come back down to the 5100 about here. And that would create a higher low at that point. So the trend would still be on the upside, and we bounce from this level here to the second portion of the 60-day cycle. So all looking quite good. Nothing to worry about with the SPX. Unless we fall below this level here, that would mean a failed cycle. But from what I can see, there's a very low probability of doing that. But certainly we can expect a period of consolidation here going into the mid-cycle before we go back to the upside. Moving on to the gold chart looks very interesting. As I mentioned, with this long wick at the top on this monthly close, that we can expect a period of consolidation. I'm not expecting it to go above that wick here at 24.30. So I'm not expecting a close there, because there is bearish pressure coming in after breaking this neckline here. So there is some profit taking going on, and we'll see that on the weekly and the daily time frame. But certainly we're making higher lows along the way on the monthly chart. So the direction of travel is still to the upside, while we can expect some consolidation taking place at current levels. And I mentioned at the time when we closed with this Gravestone Doji candle that we can expect some sort of a correction to the downside. And what we've done is we've broken down and come back and retested that level one more time. And the main thing to note there is that we didn't close above that level. So this now tells me that we are going to have a little bit more of a correction, possibly a 61.8 if we put the Fibonacci retracement on. I would expect this to come back down to this box here, the 61.8 golden pocket level, to around about 22.50. And this was the level I gave you when we had this Gravestone Doji candle, but as you can see, the demand was too much here and it pushed it back up again. But with this rejection at this point, that increases the probability that this time it will actually come back down to the 61.8. So let's see what happens over the next few weeks. This looks to me to be the more higher probability play here. And if we have a look at silver on the monthly time frame, it doesn't seem to be suffering from the same bearish pressure as gold, because we can see here we got this Gravestone Doji type candle with a long wick at the top, but with a slightly bigger body than you would normally get with a Gravestone Doji candle. So maybe that was the sign that the next candle isn't going to be going to the downside. So what we've done is we've broken above it. So this is a monthly candle, so we've still got a few days to retreat below this wick here. However, we are breaking above this neckline at this moment, so it's looking quite bullish. And if it does retreat, then it's going to give us a different signal. So at the moment, it's looking quite bullish on the monthly time frame. And similarly, on the weekly time frame, it's doing exactly the same, having broken out with this green solid candle. Last week's close of this red candle here was really coming back to retest the old resistance at this point, and it seems to now, for this week so far, from yesterday, we're getting a green candle here. So of course it can go sideways for a while, but it looks to me as though it's doing a classical move of breaking above a neckline, coming back to retest the old resistance as support before moving to the higher ground. So the silver chart is looking more bullish than the gold chart. And as I mentioned, that with silver, if you look historically, it always seems to be making this inverse head and shoulders before it breaks out to the upside. Similarly here, it broke up to the upside on the inverse head and shoulders pattern, and one more time, you can see here, head and then the shoulder, and we're breaking up one more time. So if this was to repeat, this is what we should be able to get with a big move to the upside with the silver chart here. Okay, moving on to the dollar. Very interesting developments with the dollar, mostly bearish, and the candlestick patterns play out very well on the dollar chart, I've noticed. And I do tend to mention all the gravestone doji candles that we get with the dollar chart. But here, as you can see, there's an evening star pattern. When you get this green candle here, small body candle in the middle, and a red candle on the other side, it always brings the price down. And similarly, what we've got with these two candles, they're giving you a little clue. So what you've got is a green candle at the top of this trend, and then it's followed by a equal body on the other side, a red candle. And what that is a tweezer top candle, which means that it's now a reversal candle to the downside. So you would expect, if it finishes like this in a few days' time, the next monthly candle should be to the downside. And as for educational purposes, we want to always grow in this space by learning exactly how these candlesticks work. And we can see here the question, is tweezer top a reversal pattern? And the answer is that the tweezer top is a bearish reversal pattern characterized by two candlesticks with nearly the same height in an upward trend. So this is the green candle I've just shown you in an upward trend, and this is the red candle that's followed it. So identification criteria include being in an uptrend, a green candle on the first day and a red candle on the second day with a similar height. So this is where you get the tweezer top. And this red candle is the bearish candle to bring it down further. And on the weekly chart, as I mentioned in the last video, what we've got here is an evening star pattern, which I've just mentioned on the monthly chart, what happened there. You get a green candle on the left-hand side. This is an extended one because you've got two indecision candles followed by a red candle. So when we did that a few weeks ago, I mentioned with this candle that we're going to be coming down, and that's exactly what we've got. We found support on this support line, this rising demand line here. So we could get a bounce back up a little bit to retest a 61.8 bounce, maybe up to this level before we come back down. But at some point it's going to come back down and retest this level here at around the 102 mark. Okay, moving on to the 60-day cycle. What we've got, based on our previous two targets, that in order to confirm this new cycle on day 42 here, our first target was the top of this wick here at 65,000. And we duly did that, broke through, came back, retested it, and off we went again. And our second target was the top of these candles here at the 67,000. And similarly, we broke above that neckline, came back, and used it as support before now going to the upside. Now last week we had the approval of the Ethereum ETFs, and that increased the likelihood of the price for Bitcoin to break above the previous high at about 73,000. So with those ETFs, depending on how well they do, we'll just have to have a look at exactly how they perform. So while the Ethereum ETF approvals have increased the possibility and the probability of the price going above the 73, 74,000, etc., we've just printed a weekly candle which is telling us that there is a little bit of bearish pressure, that on balance maybe we are going to be going sideways until the end of this cycle here, which is going to be around the end of June. And before the Ethereum ETFs, this was my preferred position, that if we can go sideways for another cycle, that would create a very good consolidation pattern here as a foundation for a continuation to the upside. Because if we zoom out, we can see quite clearly that whenever we've had a period of consolidation here, we've had a big move to the upside, then created another consolidation pattern, then moved to the upside, a little consolidation here, we moved again to the upside, and now we're having another consolidation period here. But we're expecting a parabolic move very shortly. And so it really does help to have a big consolidation pattern here to get the big move to the upside here. So that would be a continuation pattern from a chart point of view. So what is this weekly candle that I'm talking about that may well be putting a bit of bearish pressure on the Bitcoin price? Well, it's this one here. We just closed on Sunday with this shooting star candle. So you've got a long wick at the top and we have a smaller than a half body here. So what is this shooting star candle? So if we have a look at the shooting star candle here, it's giving us an insight that the shooting star pattern is a bearish reversal pattern that typically occurs at the top of an uptrend. So this is the uptrend and this is the candle we've got on the weekly chart. So this is going to give some sort of a bearish pressure. It doesn't always have to come back down so much. It can actually go downwards and sideways before moving to the upside. So with this kind of a candle, what we can expect, if you put a Fibonacci retracement to the bottom of these candles here, I'll move this to the left at this point. So if the price did come back and retest a lower level, that would be around about the 61.8 here at 64,000. But if there's bullish momentum, but as we've seen with the Bitcoin ETFs, there's quite a lot of demand now building up and the amount of Bitcoins bleeding out of the grayscale ETFs is going down, could quite easily bounce from this level here at 67,500. And that's where this is where the liquidation heat map is, around the 67,100. And this is exactly what we've tested so far. So these are the levels to look out for on the Fibonacci retracement. It may well be we bounce and go sideways here. And the next level at the Fibonacci 50% level is at 66,196. So 66,200. So this is another level to look out for. So this is really the range here between 64 and 67 that I would expect the range to be over the next few weeks. And I know how much you like the probabilities, and I would say that having gone above the 67,000 to confirm the new 60-day cycle on day 42, then we're more likely to actually bounce from the 67,000 here, because that was a resistant point and that will turn into support. And this is so far exactly what we've done. So this is the higher probability play. We may well consolidate between 70 and 67 for a few weeks into the end of the 60-day cycle, creating that consolidation before we move to the upside and go above the red line on the pi cycle, which I showed you at the beginning of the video. And today we've been looking at the candlestick patterns, and there's one pattern I wanted to show everybody here. It's really based on the Bitcoin miners. And on the weekly chart, we've got this particular chart for CleanSpark, which is one of the major miners that we cover on the private members section here at Wisdom Bites. And this is a classical pattern, which is very bullish. And it was a pattern I covered on the 3-month chart with Bitcoin, going back to the targets that we had at around 40,000, where the RSI MTF line was, and the pi cycle, which was a little bit higher. So this was the pattern which is now developing on the CleanSpark chart, which is one of the major miners. And that pattern is this one here, and this is a setup with 3 to 6 candles. The first part is the 3 candle setup with a big red candle here. The second candle with the top and the bottom is contained within the top and the bottom of the previous candle, which is called the mother candle. So this is the inside bar candle there. And then that has to be followed by another candle, which is a lower high and a lower low, which is exactly what's happened with this third candle. So now you've got the setup of a Hikaki pattern. And for those of you who want to have an insight into that, I would ask you to read into this Hikaki pattern there. It's incredible for your education, and it gives you the direction of where the price is going to go with a higher degree of probability. So that's the 3 candle setup. And then within the next 3 candles, i.e. this one, or this one, the price of these have to close above the second candle, which is this one here. And when it does that, it's giving you a strong clue that with a higher probability, this price is going to go to the upside. And this is exactly what happened here. This candle closed above the high of the second candle here. And that was our sign that even though it went sideways for the next 2 candles, with a higher probability, it was inevitable that this was going to happen here. So going back to the CleanSpark chart, what we've got, as I've just explained, a red candle here. The top and bottom of the next candle is contained within the top and bottom of the mother candle, this red candle here. And then you've got a lower high and a lower low here. So you got the 3 candle pattern set up, and this is the weekly chart. So we're expecting in the next 3 weeks, this is the first candle, then the next one and the next one. They have to close above the top of this candle. And when you see the top of the close of that, with a higher probability, it's telling you it's going to shoot to the upside. And so far, as you can see with this candle here, CleanSpark had a high of around about 24.70, and the current price here at 17.63 on the Friday's close, CleanSpark is nearly 30% down. So what you're getting is a 30% discount. And that in the last couple of weeks, we're making our higher lows and our higher highs. And with this pattern developing, over the next 2 to 3 weeks, we should see a close above this candle here, which is at 18.31. So the current price is at 17.63. We're looking for a close of a weekly candle above 18.31. And this channel would actually confirm that the probability is that the price for CleanSpark is going to come and hit the top of this trend line here. So the next move looks like, with this pattern developing, as I've just shown you, is going to take it to this next trend line here. Wherever that hits, it could be at $40, $30, but at the current 17.63, it seems to be presenting a wonderful opportunity to get on board. And we cover the Bitcoin miners in the private member sections. And for those of you who are interested in the leverage play of the Bitcoin miners compared to Bitcoin, and I mentioned this many times over the last few videos in terms of what we cover with the Bitcoin miners. And we can see the previous rally that we had from the bottom of this support line, the last rally to the top of that trend was from here. And that was a 191% move. And a 191% similar move from the bottom of this candle would take us to the top of that trend line one more time. And that would be about a 170% move. So we may well be getting a very similar move. And we're at the start of that, as you can see with that support line. Only time will tell, but if you do want to join us at the private member section where we do ratio trades and have a passive portfolio alongside a trading portfolio, you can join our private member section by clicking the join button here on my channel or below any of my videos, as well as in the description box below all of my videos. So if you want to join us, click the join button. For a price less than a Snickers bar per day or a coffee per week, you can join us with this amazing opportunity with the Bitcoin miners who are a leverage play on the Bitcoin price. And before I go, I want to just leave you with a very positive message about how to trade these cycles. As you know, I've been following this 4-year cycle, and the main focal point of the cycle trading is all about this, and I think you should take a note of this, that cycle trading is really taking the longer term positions. And it's a simple technique that we should always have at the forefront of our mind, because somewhere along the line we are going to get to the top of this market, and when we do, we'll have a bear market just like all the previous markets that we've had. Every time we have a top of the market, we have a bear market, and that is where this whole process will start with cycle trading. And the phrase I want to give you is that at the beginning of the 4-year cycle, that at the end of the bear market, what you've got to do is pick the bottom of the bear market, like this here and here and here. So you pick the bottom of the market and you get in at these prices. And I've shown you with the Pi cycle, as soon as the price goes below the green line, that is the time to start dollar cost averaging in. So if I put the Pi cycle on, you can see quite clearly, this is the green line. That was the best time to get in. Green line, bottom of the bear market, best time to get in. Price below the green line, best time to get in. Same happened one more time. It happens repeatedly, but people just ignore that because at this point, the fear is it's going to go much lower. So that was the second point. Pick the bottom of the market. Second point, get in. And the final point is pick the top of the market. And this is what the most difficult part is. And this is why we've got this box here for the duration of this 4-year cycle that we've been in. I've had this box here. This is what we're aiming for, to capture this move here. We've captured this part and we want to capture the second half of it. So there you have it, a phrase that you must get into your minds for the next cycle if you haven't already got in this cycle. And that is pick the bottom, get in, and pick the top. And we have the Bexit indicators, which are going to tell us with a higher probability where to get out at the top as well. So we do have some sort of a very good indicator. This proved an anomaly, but those indicators proved accurate here and here and here. So out of the previous 4 peaks that we had here, 3 of the 4 were accurate with those indicators. And at the end of the day, that is all we've got. So we'll rely on them to give us some sort of a ballpark figure of where this market is going to top out, and that is the time to get out. So pick your bottom, get in, and then pick your top and get out. Of course, it's not as simple as that, but really it can be nearly as simple as that. And now it is time for this. Yes, you've guessed it, we've got the Bexit indicator, and today we check the Puel multiple, one of our main indicators that will tell us where we have topped out. So for those of you who are new to the channel, this is our red zone all along here, you can see. This is where the Bitcoin price tops out at the tops of the markets, here, here, here and here. And this is the green zone, this is the buying zone. So whenever you want to buy, you don't have to rely on the pi cycle, you can rely on the Puel multiple here. So as soon as the price falls below this into the green zone, this is the time to actually dollar cost average into Bitcoin. If you had done that, this is what you would have got. Currently, this is where it's at. And as you can see, we are nowhere near the red zone, so we've got plenty of room for it to grow. So this Bexit indicator is telling us we're nowhere near the top of the market. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.